that's why I keep reiterating this, that if you really want to get ahead, this is it. This is the time. It's now or never.
Yeah,
The decisions you make today are going to determine your financial future and your families.
for a
And this
fact.
is the only way that this is the only time to get ahead, because in the future,
Um,
opportunities now are
Good.
not going to be available.
Alrighty, what is going on, everybody? Welcome back to another quick CyberX video breakdown. It is the end of Q1, so we are going to do a quick weekly wrap up going over what took place as we ended Q1 2024. Absolutely phenomenal price action took place this quarter. So much more yet to come in Q2 of this year. So in today's video breakdown, we're going to be jumping into some fundamental analysis, and then I'm also going to get into some psychology, and then also compare that with price action and just go through some very important things that were discussed over the past couple of months, especially if you've been involved with the content that we've been putting out. If you enjoy video breakdowns like this, do us a favor, smash that thumbs up button and subscribe to the platform, really giving you guys value and information. So first, we are going to start with our weekly wrap up from the previous week, just going over some things to take into consideration, where we are currently at in the market environment, why risk assets have been so bullish, just really understanding price action, fundamentals, and the inflow and outflow of risk assets, really truly understanding risk on, risk off sentiment. Okay. This will only benefit you as a trader moving forward. It's extremely crucial to understand these fundamental factors, the things that actually create order flow in the market. So, in a previous podcast that we did where we had Vandel as a guest, if you guys caught that podcast last Friday live on X, one thing that we discussed and talked about was why is it so important to understand the workings of the monetary system and the financial markets? And no, 100%. I think that a lot of people are going to get priced out. I think that a lot of people are going to look back in the next 5 years and they're going to really regret not taking advantage of the opportunities at hand. I'm in complete agreements with you. I think that it would behoove all of us to expect uncertain times in the future and not guarantee ourselves anything and be reactive instead of being impulsive. That means that if we do see a market crash, hopefully I myself am keeping some capital reserves on the side to take advantage of any discounted opportunities while diversifying into the current market conditions. Right. Again, we really reiterated that now is the time for education. Now is not the time to just think that you're going to download an application and just start randomly plugging capital into this market, not knowing anything about when's the right time to enter, when's the right time to exit, and actually become successful. Now is the time to mature in your investing and trading career. Take this approach when jumping into this market serious, and really understand how to come up. Don't just think that you're going to get lucky. Don't just think that you're going to become an overnight millionaire. Really understand the process in which it takes to accumulate this information and then apply it to the market properly. And if you're still listening after that little tiny rant, then in the back of your mind somewhere, you're like, huh, this guy's actually making sense. He's not here just telling me that my bags are going to pump because I'm invested in this particular digital asset. No, seriously take a mature approach and let's understand as a community, as a individual follower of CyberX, as to why markets have been so bullish, how that sentiment could potentially shift hands, right? And some things that we need to be mindful of moving forward as we head into Q2, right? So with that being said, I'm just going to read our fundamental breakdown. And then after that, we're just going to go into some psychology. I'm going to jump into the charts. I'm going to show you guys some examples live from within our community and just really pinpoint some things to be paying attention to as we finish off the quarter and head into a new one. So I said to the team, good evening, team. As the market opened today, the prevailing risk on sentiment persisted over the weekend with risk assets maintaining moderate elevation, and gold opening up with an upward gap. Now, in our private CyberX Zoom call, which again, anybody has access to if they subscribe to the monthly platform, we actually mentioned this in today's Zoom call before the market opened. When I was doing my technical analysis breakdown on gold, understanding how the market closed last weekend, what took place via the core PCE price index year over year and month over month, how it came out, the tone from Jerome Powell, and how we saw that risk on market sentiment continue throughout the weekend because of how the market closed last week. We actually analyzed that this would happen in our Zoom call. Now, I'm not sitting here saying that we're predicting the future at the end of the day, but no, we're properly maturing in our market approach and understanding what the most likely scenario is based off of market conditions. So with that being said, moving on, I said this trend stems largely from Jerome Powell's dovish tone the previous week, where he reiterated support for potential rate cuts. Remember that that has been the narrative that has been driving risk sentiment very heavily since pretty much October of last year, 2023. And what did his speech consist of last week? Well, he hinted at the possibility of 3 rate cuts in 2024. Now, this dovish sentiment persisted last week, with core PCE price index actually aligning with the Fed's expectations, showing no significant increase, right? Remember, it's the Fed's mandate to bring inflation overall down to 2%. We did not see any significant increase in the core PCE price index, which is the primary measure of inflation for the Federal Reserve. So what can we expect this week? Here at CyberX, our focus for the risk on, risk off market sentiment will center around US PMI figures, labor market data, and Federal Reserve speakers scattered throughout the week. During tomorrow's New York session, our immediate attention for intraday plays will be on ISM PMI figures. Now, these PMI figures serve as crucial indicators of economic activity within their respective sectors. The manufacturing PMI in particular, scheduled for Monday's New York session, has consistently been below the 50 grade point, indicating continued contraction within surveyed manufacturing companies. Now, should this trend persist alongside last week's PCE figures, risk assets could potentially hold on to their bullish momentum in anticipation of further potential of an interest rate cut. Remember, that's been the narrative driving demand for risk assets. So if we see lower PMI figures coupled with no increase in inflation, coupled with a dovish sentiment from Jerome Powell, those would be scenarios, i.e. things that are playing out to further support risk asset buying. You guys see what I'm trying and attempting to teach you right now? Again, it's not guaranteed, but it is more likely to play out that way given the environment that is being created in the market. Now, something else we need to pay attention to tomorrow during New York session is we have the release of the ISM services PMI figures as well, which has been mildly expanding over recent months, hovering slightly just above that 50 grade threshold. Now, should both manufacturing services PMI indicate contraction coming out downbeat, right? That means bad or pessimistic for the US economy overall. We might witness again that strength in risk assets and weakness in the dollar, which again would be the most favorable scenario for us to continuously see this risk on environment. Favorably, we would like to see a depreciation of the dollar, outflow of dollar, inflow into risk assets, inflow into cryptocurrencies. Okay, so to sustain this bullish momentum in risk assets overall, let's talk about that. Here at CyberX, what we are paying attention to is we hope, again, we cannot guarantee this, but we hope to see the PMI figures tomorrow fall below market expectations or previous readings. However, on the flip side, we always play the opposite. We always play the inverse. We are reactive traders. We're not impulsive traders. We need to adapt to the order flow of the market. Okay, so be prepared for intraday dollar strength if both PMI figures tomorrow unexpectedly expand. This would most likely prompt a risk off market sentiment and provide intraday dollar strength, right? So again, just scenarios to keep in mind playing out as we start the week. Now, later in the week, our focus will shift towards the Federal Reserve speakers, which will be scattered throughout the week. I believe we have some on Wednesday and Thursday, and then also Friday, if I'm not mistaken. I just need to double check the calendar, but just pay attention to that. We also have some labor market data with unemployment rates coming out at the end of the week. And then also, obviously, of course, we have unemployment claims midweek on Thursday. So overall, it is extremely crucial when implementing capital into these markets or being involved in these markets that you know these things. Okay, at the end of the day, we cannot predict where price is going, but we can analyze these fundamentals to analyze if there is a risk on or risk off market mood. And again, it's not financial advice, but when there's a risk off market mood and I'm looking to invest in cryptocurrencies, I look for discounted prices, right? If I'm looking for intraday trades, I'm not looking for buy positions because I know that the vast majority of positions in the market are going to be sells, right? Risk off, outflow of cryptocurrency. And then vice versa, understanding if there's a risk on market mood, it favors buy scenarios. Okay. So again, you can utilize this information to your advantage. And if you're still here listening, then do us a favor, smash that thumbs up and then subscribe. If you're like, wow, this guy's spitting some facts, he's not sitting here just telling me that I'm going to be an overnight millionaire and he's actually trying to teach me something, do me a favor, make sure that you're also subscribed to the platform. We do appreciate the love and the support. So now real fast, I'm just going to share my screen with you guys. We're going to go inside the CyberX private Discord. This was that message in particular that I was just reading to you guys. I send my personal fundamental analysis to the CyberX group every single evening, giving them an update on what I am personally looking for in the market, given the next couple of trading sessions, week ahead, next trading day, and so on and so forth. Now, something I want to take your attention to is a message that was put out by one of our profitable traders in the CyberX community. Now, he goes on to say, if anyone's struggling to execute in the market, what I've learned the hard and painful way is the less you trade, the more proficient you become. I 110% agree. I cannot stress enough. If you want to mature in your trading and investing career, stop thinking that you have to be a market participant all the time. In this market, it is not about quantity, it is about quality. And if you can commit yourself to placing and taking quality trades, entering in the market during the right time, i.e., gauging when it's the right time to enter into the market by understanding if the market's discounted, if it's not, so on and so forth. All these elements, all these confluences, all these things that you can add to your trading by maturing and putting them in your trading regime, then you will really start to realize that it's actually about trading less often. Personally, in my own trading career, I realized that a lot of times I would become or make profitable trades at the beginning of the week, Monday through Wednesday. If I continued to trade, being greedy and not controlling and managing my greed properly and wanting more from the market Thursday and Friday, I would find myself forcing trades. I would find myself trying and attempting to see something in the market that wasn't there. So instead, what I started doing is I zoomed out, went to the higher time frame, started setting myself areas of interest, and started really understanding patience. Okay, so let me show you guys an actual live example with screenshots from within the private CyberX community to back up what it is that I'm saying on how patient one needs to be in order to take trades and to really grow a portfolio. So here is a screenshot from our private CyberX group chat. Again, if you guys want access to this information, I give my personal dollar cost average levels on the basket of currency that I'm particularly building a portfolio in the monthly Discord. You guys can visit cyberxtrading.com and you have direct access to that information. Now, it's not financial advice. It is levels that I'm personally looking to implement capital on. But let me show you guys a beautiful example. Okay, so on Wednesday, March 20th, you can see the date and the timestamp at the top, and we're going to particularly be focusing our attention on ICP. Okay, I was attempting to build a very large ICP bag in the first quarter. And as we ended 2023, I was able to accomplish that because of the strategy that I utilized. And I'm just going to show you a part of that. Okay, so here you can see the message. I said, these are the dollar cost average levels that I'm looking to implement capital on, keep eyes on. And I said here, ICP, as long as price is below $11.50. Preferably below $9.50, and I labeled it active because at time of messaging the CyberX community on March 20th at 7 a.m., you can see, looking down here at the bottom of my screen, March 20th, right, Wednesday, 2024, this is where price action was at. Now, if we look over to the right-hand side, you can see that price action was underneath of $11.50. So for me, I was implementing capital here in this price. Okay. With that being said, now let's reiterate what it is that we're talking about. If anyone's struggling to execute, what I've learned the hard and painful way is the less you trade, the more proficient you become. So after March 20th, we had a very significant rally on ICP, where from around $11.50, we rallied all the way up almost into $21 per ICP. That is a significant increase, and we were able to dollar cost average in. So you can imagine that there were people in the CyberX group and also publicly on the internet who felt FOMO, who felt like they were missing out. And they most likely started chasing the top of price action when price was roughly at around 19 cents in this consolidation that you can see here, before price poked roughly around $20 and some change and then sold off. So you can imagine all the people that feel pretty stupid buying into this rally at this high, not having any predetermined strategy or areas of interest to be dollar cost averaging in from, not really understanding technical analysis, and just seeing green and thinking now is the time to go, go, go. So let me show you another example. So here, obviously, of course, implementing sound technical analysis, understanding of fundamentals, okay? Here in this area, you can see looking down at the bottom of my charts, this was Wednesday, okay, the 27th of March, 2024. Now, during this day, we had a hawkish Federal Reserve speaker. Okay, Christopher Waller delivered some hawkish remarks. Here are screenshots from different fundamental articles showing you guys that information. Now, this hawkish remark weighed on risk assets intraday on Wednesday, the 27th of March. Now, prior to that, let me show you guys, because that information came out after I put this analysis to the CyberX group. Just doing some simple sound technical analysis and seeing people want to buy ICP in the private group chat, a lot of people are asking me, where could I get into ICP? Where would you, Cypress, look to get into ICP if you missed buying at $11.50? I don't want to buy at $20. What could I potentially be looking for? And I said, okay, let me take a look. Let me do my analysis and show you guys what I would like to see. And I'm going to show you how I physically said this in advance before it actually happened. Okay. So here, looking in this area of accumulation, what I noticed is that we saw some very interesting price action here, higher highs, higher lows, price consolidated for a little bit, reaccumulating orders, and then flip back to the upside. So I saw this as an area of interest where market makers started to facilitate orders into the market to drive price higher. With that being said, I messaged the private CyberX group, okay? And you can see that message here. Look at the date, the timestamp, Wednesday, March 27th, 2024 at 8:31 p.m. And I said, updating my dollar cost average levels, as long as ICP is below $17.50, that is where I would personally look to re-implement capital into this market. You can see that that was at a significant high. You can see that this is where price action was Wednesday on the 27th, the same exact day that I knew Christopher Waller from the Federal Reserve again delivered a hawkish statement which weighed on risk assets. Knowing that information, reiterating back to what I previously said, I assumed correctly, again, because we don't know what's going to happen next. We can only assume, we can only generate confluences, we can only really create an edge for ourselves. I properly analyzed that there was most likely going to be discounted prices at this particular psychological level. So instead of buying at almost $21 per ICP, our team, our community, look at this, was able to get in at a discount at $17.50. And sure enough, you can see price trickled down into that previous discounted area of interest where banking institutions accumulated orders and expanded to the upside. Boom, price came straight down into it, tapped into $17.50. And since then, albeit it hasn't been anything significant of an increase, we're still not buying at tops, right? And if you really look, and this is, again, remember, to reiterate back to the comment that even opened this discussion, it's not about how much you execute. It's about when you execute and the proficiency and the effectiveness of how you do it, okay? It's not about the quantity, it is about the quality. Let's say that you were looking at price when it was rallying here on the 25th of March on Monday. It would have taken you until price hit $17.50, almost over 3 days, for you to really catch this move. So again, you're not sitting at the charts trying to trade and scalp every single position. You're understanding the order flow of the market, that when markets rally, they pull back. Okay, really understanding what creates those pullbacks in the market and what created those risk-on environments that pump the markets in the first place. So if you all enjoyed this information, do us a favor, smash that thumbs up button and subscribe. Remember, none of this information is financial advice. I'm attempting to give you guys perspectives from my point of view in the market, things that have made me successful at the end of the day. They could or could not work for you, but I hope that what I was saying really made sense as to how we execute things here at CyberX, how we view and look at the markets from a macro perspective, how we've been able to gain an edge. If you all want to tap into that edge that we've created for ourselves here at CyberX, then again, you all can join the private CyberX Discord by visiting cyberxtrading.com. We would love to have you on the team. As always, many blessings to you guys. Be cognizant, be aware, and I will see you all in the next video breakdown.